Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Meera Dugal. Let's get straight to the headlines this Monday afternoon. Markets cheer Salil Parikh's appointment as CEO of Infosys. Brokerages say the new CEO will mean continuity and is a good pick. Stock up 3%.
Biocon surges 10% after the US pharma watchdog clears a biosimilar drug jointly developed by the company and Mylan.
The Bombay High Court dismisses a plea opposing the merger of erstwhile NSCL with its parent 63 Moons Technologies, earlier known as Financial Technologies.
Chief Economic Advisor Arvind Subramanian says the government should freeze the income tax exemption threshold at current levels since lowering it would be politically untenable. That's a Bloomberg Quint exclusive.
And Rahul Gandhi files nomination papers for his post of Congress Party President.
Thanks for joining in. Let's take a quick check at how the markets are faring this Monday afternoon. Pradeep is taking a closer look at the stocks. It's been a volatile trade, but you're seeing some sort of a technical bounce back, isn't it?
Yeah, indeed, there is a bounce back. And if you look at it, after falling for last two sessions, Thursday and Friday, there's a little bit of relief. And I've been asking this question to all my dealer friends as to what has really happened. And they have pointed out, one data point, which is very significant, that over last two sessions, when markets were falling, what usually happens is you look at what the option writers are really doing. In a market like this, when there is steep decline with good volumes and all the heavyweights come under pressure, usually we have seen that there is a significant call writing that happens at the higher levels. So you would expect, at 10,000, if market is close to 10,100, you would expect 10,200, 10,300 levels on Nifty to see significant call writing, but that hasn't really happened this time around. Look at what has happened is that, most significant buildup has come at 10,500, which is again kind of a range that we have seen in last expiry or the last series, which means traders don't really expect that range to break. And on the lower end, at 10,000 level, we have seen very significant put writing. So bulls are definitely hoping that the 10,000 to 10,500, the range that was maintained in November, will probably sustain. And once you come at the lower end, some amount of short covering is but likely. And then, of course, like we mentioned in our top stories, there is help coming in from Infosys and some other such stocks. So definitely you have certain sectors helping out, some good news, some of the mid caps which have come with good numbers are also helping out in today's market. So net that could be a reason why market is kind of trying to hold on, but so far this is only a bounce. Traders believe that 10,200, 250 will continue to remain a very strong resistance, and we can really be confident only if markets hold at higher levels. So till then, we'll probably consider it just as a bounce.
You want to talk us through what's going on at the volatility index? Is there more to read from that? Because it's swung quite widely.
Yeah, so what has happened now, what we observed over the last series also, is that volatility index is now inching up. But, at one point of time, anything above 14 was really alarming. Now, probably, the range has shifted higher between 12 and 14 and a half, 15 types. And we cannot really be, sure that there is a decisive breakout and we'll see consistent rise in volatility. So what happens is, and that has been the experience over the entire November series, that we kind of give a breakout. It looks like that we are going to go above, but around 14, 15, somewhere between 14 and 15, the VIX again starts cooling off. So I think it's possible that we'll see the repeat of that. So we'll probably have to wait for VIX to sustain. I mean, bears would like to wait for VIX to sustain, and also they would like to see the 10,100 level broken, because if you look at the entire November series, we came very close to that. The intraday low was around 10,994 or so, but we didn't break. We didn't spend much time below 10,100. Today again we have bounced back. So now this is not a good time to at least initiate fresh shorts. That is what traders believe, that they'll wait for a decisive breakdown, or they'll come back and short at higher levels, maybe closer to 10 to 50.
All right, Pradeep, thanks so much. That's the structure of the market. Lots of interesting stories, though, in the market today. And Infosys, of course, has a new MD and CEO. That's one of the top stories. Nearly 4 months after Vishal Sikka left, the appointment was finalized over the weekend. The 53-year-old Salil Parekh was on the Executive Board Council of Capgemini. He takes over the reins at Infosys on the 2nd of January. His task, of course, is cut out. He has to steer the IT giant towards becoming a more services-led company. His background in that segment, particularly application services at Capgemini, should help him as he takes over at Infosys. In their initial reaction, most brokerages are fairly positive on the news. CLSA said the choice was promising and added that it was the best of possible outcomes. Credit Suisse said the appointment is a good combination of both worlds and will not lead to a significant change in strategic direction for the company. Nikki's here with the details of what different brokerages are saying on the appointment. Nikki.
Pretty much covered it all. 3 brokerages that we are talking about, Credit Suisse, HSBC and UBS, they've all had a positive view. They've not changed their rating, and they've also kept their target price, for that matter, unchanged at the previous level that they had. Now, HSBC had a buy rating, while Credit Suisse and UBS both have a neutral rating on this counter. What Credit Suisse has to say, typically that we do not cover, is obviously the CEO appointment is a good combination. It says that it does not expect a major shift in its strategic direction, and it also do not see any major near-term impact of this development, neither positive or, for that matter, negative. It probably says that Salil is the best outcome that the company could have, at least from a medium-term point of view. HSBC, on the other hand, it's also saying pretty much the same thing. It says that it seems to be a very balanced and a positive choice, and however, it says that there is a risk of potential attrition in top management post the big management change, which is pretty much the case with all the companies, not just Infosys for that matter. And it continues to value the stock at 16.5 times its 1-year forward price to earning ratio. UBS also says that this appointment is definitely a sentiment stock booster, and it says that it allays the concern to attract senior external talent post the board issue that we saw, and also was the issue that we all were talking about. And this also helps the company back to focus back on its usual business, and it sees a limited downside risk for this counter until its FY19 revenue guidance announcement comes in, and it does not even rule out a lower revenue guidance for the coming year, for that matter. And importantly, it awaits the CEO's vision, given the kind of background that the CEO brings and its potential for a transformative strategy, for that matter.
Nikki, thank you for that. Let's also listen to what industry veterans and trade experts have to say about Salil Parekh's appointment. Let's start off with Infosys board member Kiran Mazumdar-Shaw's reaction right after the announcement was made on Saturday.
Understands global trends, that he works for a fairly, a sizable multinational company, which also has a very large workforce in India. Obviously, culturally, he understands, India and the Indian business and the Indian, workforce. So we felt that was a very good, fit as well. So I think overall, he came through as a holistically very good candidate.
And what do you think? What are his core strengths that will complement Infosys in driving the growth? Now we are into a phase of transition to a digital approach as well. And
so I think Salil brings on board the kind of skills that we are looking for. He has been a turnaround manager in Capgemini. He has grown new businesses very well in Capgemini. He understands the digital space very well. He's considered to be a good people person. He is, a very soft-spoken, but at the same time very determined and firm person.
I think this is certainly a very positive development from multiple perspectives. First and foremost, Salil is a well-known figure in the IT industry. He was leading the application services at Capgemini. So he's well known in the industry knows him well. And so he's well rooted in, the ecosystem here. The second is he also has, by virtue of having been in Capgemini, multinational experience, global exposure and experience. So that's certainly another factor which would stand Infosys in good stead. And finally, I think this brings the curtains down on the various issues which arose, when Vishal Sikka left Infosys. And there were many questions about the change and, what would be the roadmap ahead. And I think Infosys needs to be complimented on having brought things to a swift close and having settled that issue and enabling him now to get on with the job.
First point, it is good that they have got a person from outside who is fairly senior, would be based, near client as well as knows the offshore location. So I think, from experience and profile perspective, surely a good fit. So that's my point number one. Point number two, I think, it's good that, it's not delayed further. So from timing perspective, they had said October end, for appointment, slightly delay here and there, which is okay. So, good that they have come to conclusion and got somebody who is fairly experienced, can handle this scale because, Capgemini is a fairly of a similar scale. So, very similar experience, very similar profile of business handling. So, good fit, prima facie.
Okay, those are reactions to Salil Parekh being appointed as the CEO of Infosys. Let's talk about another stock, Biocon, that's been buzzing in trade today, gaining more than 10% on opening before settling with gains of around 9%, actually 11.5% right now. This after Drugmater received a go-ahead from the US pharma watchdog to sell a biosimilar jointly developed by two drug makers with Mylan as well. Let's go across now to Darshan Mehta for the update on why this is big for Biocon. Darshan.
Harsha, it's big for Biocon given the fact that it's the first biosimilar that has been approved out of India. It's a big drug. Herceptin is the original name. Roche is the innovator. So Mylan and Biocon have already settled with the innovator and probably the launch will happen in 2019. Now, it's a big drug, $6 billion worldwide, and for the US market, it's close to $2 billion. So that's Biocon and Mylan already have the first mover advantage. There are a lot of other filers, but at this point of time, it seems that Biocon and Mylan have the first filer. The revenues will start trickling in for Biocon by FY21 as per the brokerage reports that are there. But this actually, there are two things that are proved because of this. First of all is the capability of Biocon to handle complex drugs and biosimilars. So that has been taken care of with this approval coming in. There were a lot of negative news and reactions that came in when they actually had to withdraw the filing from the European market because of issues as far as their Bangalore plant was concerned. And now because of this approval coming in, it also proves that their Bangalore plant is out of the US FDA bounds for any kind of concern. So those are the positives that have come in. Morgan Stanley has raised the target price to over 650 on the counter, indicating that fact that the issues for the plant is over. CLSA has maintained the sell but has raised the target price. They believe it's been fully priced in at this point of time. But overall, the news is extremely positive. Let's also hear in what the management had to say on the entire issue of getting this approval and the way ahead for Biocon post this approval now.
This is a $6 billion global opportunity. The US opportunity itself is $2.5 billion. Europe is $1.5 billion. I don't see too much of competition in the early years because we just have a few players who are developing this program. So we do expect 3 to 4 players both in Europe and US. This is a profit share arrangement. Of course, Mylan gets a bigger share of the profit, but we get a pretty decent return as well. So I believe that this is a very, very important partnership which has succeeded in bringing the first very important program to the US market. And we expect that the pipeline of products that we have will also basically follow this very important approval.
Reliance Communications has made it amply clear that it hopes to monetize its spectrum by selling it to other telecom operators. In a press release dated 1st October, I believe, the company said that the gross value of its spectrum portfolio is close to around 19,000 crore. The question then is who will buy it? Somin Sarkar is looking at some possible bidders and who it makes sense for to pick up this portfolio.
So I'll start off with showing what are the assets that they own and which one is the most valuable. So if you see, Reliance Communication has close to 102 megahertz of spectrum in 800 megahertz band, 10 megahertz of spectrum in 900, 85.2 in 1800 and 65 in 2100 megahertz band. Now of this, except for 1800 megahertz, every other spectrum that they own is liberalized. 1800 is an administered spectrum. And the most valuable one is 800 megahertz of spectrum because it provides the best 4G coverage when it comes to compared to other spectrum bands. Now if you see, now let's see why Reliance Jio might be interested to buy this spectrum. Now Reliance Jio is mainly providing 4G using the 800 megahertz band, and the spectrum that they own in these specific circles have a validity till 2021. While on the other hand, Reliance Communication has spectrum in these circles with a validity till 2033. So two reasons why Reliance Jio might be interested. First, now currently they can use this spectrum of Reliance Communication because of the spectrum sharing agreement that they have, but any sale of these assets would put Reliance Jio's 4G coverage in a fix. Secondly, a longer validity of these assets would make it more lucrative for Reliance Jio to buy these assets. Now when it comes to Airtel, Airtel is currently providing 4G services using 1800 and 2300 megahertz band, which is not the best to provide the 4G services. And Reliance Communication has has spectrum in 800 megahertz band in all 22 circles. So if Airtel wants to upgrade its 4G services to 800 megahertz band, this is one of the options. Now Airtel currently has 800 megahertz band that it acquired from its recent acquisition of Tata Teleservices, but most of the acquired spectrum is administered and it is liberalized only in these specific circles. Now to use the administered spectrum to provide 4G services, Airtel will have to incur a liberalization cost. So Airtel has two options. First, either to pay the liberalization cost to provide the spectrum band to provide 4G services, or secondly they have the option to acquire Reliance Communications spectrum. Now when it comes to Vodafone and Idea, now the combined entity would require 5 megahertz of spectrum in Himachal Pradesh that Reliance Communication owns, which has a validity till 2035. Now, though the combined entity has would have the largest spectrum portfolio and would have sufficient spectrum, but it will still need this spectrum to provide 4G services in Himachal Pradesh because currently it has only 0.6 megahertz of spectrum in 1800 megahertz band.
All right, Swami, thank you for that. That's what's on offer by Reliance Communication if it were to be interesting to potential parties. Let's move on now. The Bombay High Court today made way for the merger of National Spot Exchange with its parent 63 Moon Technologies, earlier known as Financial Technologies. While dismissing a plea opposing the merger, the court gave the company 12 weeks to appeal before the Supreme Court. Shivani Saxena is standing by with more details on this. Shivani.
Thank you. So the Bombay High Court today dismissed FTIL or Financial Technologies appeal to effectively set aside the order of the Ministry of Corporate Affairs, which directed that the companies be merged, the two companies being Financial Technologies, which is now known as 63 Moons, and its defunct subsidiary NSEL, which is National Spot Exchange Limited. So the Bombay High Court has also given 12-week period for Financial Technologies to appeal this before the Supreme Court, which Financial Technologies intends to do as per its press release today. If you recall, back in 2016, Ministry of Corporate Affairs had passed this order in the interest of, in the public interest, where it allowed two companies to amalgamate or merge. And this was in light of the scam where it was discovered that NSEL had defrauded its investors of an amount attuned to 5,600 crores. Now before the Supreme Court, FTIL will probably argue that this violates basic corporate principles, which is the limited liability partnership principle, as well as piercing the corporate veil principle. So it remains to be seen how the Supreme Court will look at it.
Shivani, thank you for that. That's an interesting one. Let's see how the story unfolds before us. Hindustan Oil Exploration Company is looking to make a comeback a year after its majority owner ENI SPA sold its stake in the company. The private oil and gas explorer, which recently started production at a new field in Assam, is now headed westward with an aim to start exploration in a rig situation in Mumbai offshore. Devji Chakraborty from Bloomberg News, who spoke to the company's CEO recently, joins us with the details. Devji, what's on the anvil? What are the internal targets for Hindustan Oil Exploration?
Hindustan Oil Exploration is on the path of resurrection from the ashes, having started production from a key field in Assam oil and gas output from a key field in Assam called Dirok. The company is now pushing ahead with a lot of other development plans. One of the block which it has won through the auction last year. The company has already submitted a development plan for that, and the company is also reviving production from a block down south. The company is hoping that with all this production coming online, it will be able to increase its sales by almost 12-fold within 3 years. Remember, the company had actually seen sales dropping to as low as 255 million rupees from its peak of 3.5 billion rupees in the last 7 years. The company is now targeting at 300 crore or 3 billion rupees of revenues within next 3 years.
Away from corporate news and into the macros, the Indian government should not raise the income tax exemption threshold any further. That's a word coming in from the Chief Economic Advisor Arvind Subramaniam. In an exclusive interview to Bloomberg Quint's consulting editor Praveen Chakravarti, Subramaniam said that since lowering the threshold is politically untenable, it should be frozen at current levels. Listen into a bit of that conversation.
I don't want to sound trumpeting the survey, but in fact, in not the 2017 survey, but the 2016 survey, we had a chart showing exactly that China and India and the exemptions. You see, I think what you've said is a very good point, but here's what I think makes it kind of doubly unfortunate, right? The Chinese strategy was fix a low exemption threshold and then do nothing. And the do nothing actually is what increases the tax net, because nominal incomes grow and people come into the tax net. Yeah. I think we have, erred in that very seriously. And I don't think we're going to err on that again. You see, because it's, the best reform is when you have to do nothing. I think that's kind of the Narasimha Rao probably principle of reform, you know, where the status quo is reform. Sure. Seldom do you get that opportunity, and I think we should do that. And I think at least, because it's going to be, you know, actually reducing the threshold is going to be politically tough. So difficult. I think, you know, I mean, so the solution that is to basically say freeze the threshold, or I mean, we have to do other things as well. Yeah. But certainly raising thresholds is, I think, inadvisable.
So the new direct tax committee that has been set up, will you promise to take this up? Should we even link exemption to some sort of per capita income? I mean, there should be some framework by which we do this.
But you know, but by looking at your numbers that you cited, I think we are so far away, right? Yeah. That, you know, if we can't reduce the threshold, we should
do nothing for at least.
That would, I think, be the way forward.
Hopefully, you put this on the agenda in the direct tax committee. But the other thing I wanted to talk to you about taxation is about direct versus indirect. I mean, states and center combined, our direct to indirect ratio is 35-65, the exact opposite of other OECD nations. We all know the indirect taxes are regressive, hurts the poor more than the rich, but there is so much emphasis, and I understand it's easier to collect. I understand administrative efficiency of indirect taxes, but surely that can't be the reason for us to have such a skewed ratio, and I don't see this being debated or something to be done to correct this skew.
See, I think that firstly, I'm very sympathetic to what you're saying, but for a slightly different reason, right? My own view, and you know, based on all the research that I've done on economic development, is that we know that it's taxation that's the glue to institutional development, and direct taxation, you know, where people feel that they're actually contributing.
And it's progressive,
and if you look at you know, the history of you know, Western economic development as well, I think you know, early on in the United States you had actually land taxation financing the infrastructure development, and then you had the income tax, and then of course you had, you know, the welfare state based, and the wars leading to more of that. You see, I think that, but one lesson I draw from that is that in advanced countries, it's some of these major shocks that have led to huge increases in income and social security taxation as well. We've not suffered this shock, so I think it's that way. It's a little bit more difficult to do, but I firmly believe that you have to build that link between center and state, between the citizen and state via income taxation. So I think we should do more. But let me give you kind of a new dimension on this, which I've been thinking about the last few months and weeks on this. So the question is, how do you do that? It's a political economy question, right? How do you do that? Now, here's for me the thought I want to leave you with, and maybe you've thought about this more than I have, that we are into more and more devolution, right? Of expenditure and also tax powers. Right? But I think that in India, the closer you are to the people, the more difficult it is for you to tax them. Yeah, and that's why you take
an alibi. You mean,
no, it's not alibi. No, it's not alibi. No, I'm not saying it as alibi at all. But think about it this way: property taxes.
Yeah.
Under as we and we all know, underused. Yeah. I suspect that the third tier. Even the Panchayati Raj institutions are probably actually raising very little money relative to what they could. So here's the dilemma, right? That we think that income taxation is very important. Then, if you start devolving more powers, and the closer you are, the more difficult it is to raise, then you're in this structural problem. You're devolving expenditure responsibilities, and you're not going to get taxation there. Right. So what do you do? And I think that's kind of the bigger long-term thing that we need to think about.
That's a fascinating thought, Arvind. I realize you just flipped the entire idea of taxation without representation in some sense.
Yeah, exactly. Right?
It's conversation with Arvind Subramanian, but let's move on and step into a short break. Coming up next, we're going to get you a view from an FII. Jasper Lawler, head of research at London Capital Group, will join us on the other side.
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Just business news, we're news for business people.
Back on lunch, the headlines at this hour. Volatile trade on the Wall Street as key indices clock in minor gains. Mid-caps are off the high point with the index trading flat.
The benchmark 10-year bond yield trading at its highest level in 15 months ahead of the RBI monetary policy decision on Wednesday.
Foreign institutional investors bought Indian stocks worth $3 billion in November, making it the highest monthly inflow in this financial year.
And Rahul Gandhi files nomination papers for the post of Congress Party president.
We're seeing a good bounce back today, led by Infosys and other stocks. Neeraj is here to tell us what's moving.
Yeah, so encouraging day of trade. Also because in Friday's session, we were all talking about how perilously close We would be if we slipped another percent to the 100-day moving average. So I think we are well above that 100-day moving average in today's session, which is good. VIX has edged higher though. It's very close to the 15 mark now. India VIX 14.87, maybe a bit of a cool off, 5 odd basis points cool off from the highs, but still very close to the 15 basis points mark as well. It's a quiet day in Europe, but I think the last time I saw Dow futures were trading much higher. Maybe that is giving that a little bit of a sentiment booster as well. What is moving? I think Harsha, you mentioned it right, Infosys, and that's leading the other IT stocks higher too. So in today's session, Tech Mahindra, HCL Tech, all of these are trading much better. And I think the November sales numbers impact is being seen on the two Tamo twins as well. So both Tata Motors and the DVR, which was actually much higher earlier, now has come off a little bit, but still 2% for Tata Motors, about 1.25% for the DVR. So these seem to be doing okay. Biocon, needless to say, you could well argue that is a stock of the day today, now higher by about 12% odd, 497 in counting, and some result reactions seen for a couple of names, Setco, Rico from that mid-cap auto component space, but largely about IT. And the fact that we are not trending lower in the day. It's quite unlike what happened on Thursday and Friday when we started off well and went lower. In today's session, midway through trade, we went lower. For now, at least, we seem to be in fine fettle.
Neeraj, thanks so much for that. That's the market check from Neeraj. The bond market check is not all that healthy, actually. Bond yields continuing to trend close to that 710 mark, 709 as we speak. Nupur is here. Nupur Acharya of Bloomberg News is here with us, telling us what the sentiment in the market looks like. Not looking particularly bright, right?
Very, very well put. So, you know, the RBI monetary policy, if you just keep the Gujarat elections aside, is probably the so-called last big event of 2017. But markets are not putting too much hope behind it. Given that there is a fading optimism that RBI will cut rates, given its very hawkish stance on inflation, and now that the growth has also rebounded. But the big concerns which are creeping up on the market right now, the big thing is the oversupply of bonds. So, if you consider this week, bonds and treasury bills together, we have about 350 billion rupees of paper up for sale, which is a lot of money. Then again, there is also a concern that the budget deficit could be wider, which means the government may end up borrowing more from the market. So obviously bond bulls aren't happy. So all in all, a very sorry state of affairs.
Anything they're watching from the policy, I mean, not rate, but in terms of guidance, particularly on liquidity?
Well, you know, liquidity is the main point which everybody would be focusing on, given that how RBI is going to deal, how the OMOs are planned going forward, because the budget deficit concerns are pretty high. Just look at the yields. We are already close to 7.10%. We are up over 60 basis points since from end July, and investors believe that yields could go up further. So it's a very sorry state of affairs. We'll be very closely watching the policy for any positive cues.
Just one quick question, Nupur. I was looking at a report that said, you know, some of the foreign investors, the Morgan Stanleys and the Nomuras of the world are actually looking at higher rates in 2018. Is the bearish tone going to continue in calendar 2018 as well? Is that what investors are mostly sort of penciling in for bonds in India?
Given at how the RBI is looking at inflation, we could almost say that that is where the yields are headed. And investors, the foreign investors specifically, always look at higher coupon rate to enter the market. They always look at yields. Unlike the domestic investors who would like to play on prices, and lower prices attracts them more. But foreign investors believe that there is that bias towards higher inflation, which means that the RBI might be going slow, or at least they might pause in cutting rates further.
We'll leave it there, Nupur. Thank you so much indeed for joining us. That's the bond market for you. Maruti Suzuki, meanwhile, sales in the month of November grew 14%, in line with what analysts were expecting. R.C. Bhargav, chairman of Maruti, told Bloomberg Quint in an interview that the ability to keep the current market share depends on how the demand for cars plays out in the next few months. Let's hear him out.
See, it's very difficult to predict how the market will grow in the coming months. If the market grows slowly and we can keep increasing our production, then I think we can maintain a market share. But if there is an acceleration in the demand for cars and the market grows faster than what it has been doing till now, because our production will be limited, it will not be possible to maintain the market share. So the ability to keep the current market share very much depends on how the overall demand for cars happens in the next few months. The increase in the commodity prices has an adverse effect on the total cost of production. But to some extent that has been offset by the hedging which we had done earlier in the year. Whether there is a need for a price increase or not is something which will depend on the totality of all the factors, including the impact of higher production. And I think that decision will be taken only as we go along from time to time, whether there is really a need for a price increase.
Indian banks are bracing for another hit this month when the deadline to resolve a second list of stressed accounts expires. It is expected that most of these 30-odd accounts would be referred to the NCLT, which could mean higher provisions for Indian banks. P.S. Jayakumar, CEO of Bank of Baroda, who spoke to Bloomberg Quint earlier today, explained that in the case of his bank, the total provision coverage ratio against these accounts is about 54%, and at most they would need to set aside another 1,000-odd crore in provisioning for these accounts. Listen into a bit of that conversation.
Without taking into account all that we have done so far, the total coverage ratio with respect to List 1 and List 2 is around 54%. The exposure in List 1 is on, I think, 10 companies with 7,400 crores or thereabout, and in List 2 it's around 4,500 or thereabout. That broadly are the numbers. We currently have a provision of 54%, but it is in certain assets we are fully provided, in some we are provided 60% and above. So if everything is brought back to 50%, in other words, every asset must at the minimum be provided 50%, we have a catch of about 1,000 crores to 1,100 crores of additional provisions to be taken. We are still waiting for the outcome for List 2. There's still some work underway, and we would get to know the full picture by the end of this month. But assuming all the exposures we have would be referred to NCLT, then the incremental provision that we would have to make over the next 2 quarters would be in the 1,100 crore level.
Okay, thanks for that detail, sir. Just the other uncertainty around this whole issue now is that promoters are being kept out of the bidding process. Some are worried that that will mean a lower price discovery for banks and hence higher provisions. What is your view?
Okay, let me put it this way. Our own exposure with respect to most of these assets and the total exposure of those companies on the 1 to 1.5% level. So we're not really actively involved in influencing the outcome other than supporting the consortium bank to go ahead with the plan. Now, there is always arguments and arguments, one side of the argument being that this is necessary to get better pricing, and the other side of the argument is that there is a moral hazard, and a change in this kind of regulation will ensure, even if there are some short-term costs, of better compliances going forward. So both these exist, but whichever side you want to support, or whichever argument you are more favorably inclined to, is of not of any relevance now, because the law is what it is. So I think instead of debating whether it's good or bad, we just move forward from here. My own preferences may be on one side, and you may think about it differently. Those are points of views, and both may have a compelling case, but it's a law, and the position is what it is. So I do see, though, that there is a sufficient amount of interest in many of these assets. I can give you some example of that we are for the first time seeing demand for a secondary market purchase of some of the assets which are an NCLT, and the preliminary offers are close to or a little above the provisions we have so far taken. So these kind of movements would not happen unless the assets are going to see, the underlying transaction is going to see value. So based on the limited set of information flow I have, my conclusion is that probably this may not be a large deal, but we have to wait for the whole story to play itself out. There's also a lot of interest from companies which are big. Many of these assets are good, and there is a consolidation opportunity for many of the players in the steel sector and the power sector. So let's watch, but I don't know why we need to take a very particularly pessimistic view.
Vijay Mallya's extradition trial begins in Westminster's Magistrates Court in London today. The 61-year-old businessman is wanted in India on charges relating to his now defunct Kingfisher Airlines and their default on loans to various Indian banks amounting to about 9,000 crore. The former Rajya Sabha member, who has been in self-imposed exile in the UK since March 2016, has maintained that he has done nothing wrong and described the allegations against him as fabricated.
India is back in favor with foreign investors. FIIs pumped in more than $3 billion in Indian stocks last November, making it the highest monthly inflows in this financial year. Will this trend continue? Joining us now from London is Jasper Lawler, Head of Research at the London Capital Group. Jasper, thank you so much indeed for joining us on Bloomberg Quint. Before I get to India, let me ask you what's going on in global markets. We are ending the year with global markets pretty much near all-time highs. How do you think the markets are positioned at this juncture?
Well, I think, good morning, by the way. I think probably most would agree that the markets are looking pretty stretched, but given this latest surge momentum, thanks in large part, I would say, to the progress on tax cuts in the US, it's hard to really find any justification for a sell-off into year end. Probably, if anything, we might see a little bit more evidence of rotation between the sectors. Obviously, we saw that quick sell-off in tech stocks, and I know that's reverberated quite strongly in Asia as well. There might be a little bit more of just profit-taking into year-end on the things that have done well, so technology obviously being an obvious sector in most parts of the world, and maybe a rotation into other areas set to benefit. So financials were the theme last week, but we may see some other sectors start to pick up interest as well as investors look ahead to the new year coming up.
Would be the news events that will define the trajectory of the markets here on, Jasper? What would you be looking out for?
A crash in Bitcoin? Just joking, obviously. There are, I think, probably within Europe, we're looking at the progress of Brexit negotiations. So I think that should there be a no-deal scenario, which actually is very much on the cards at the moment because of the contention over the Irish border, I think that could spill over globally, like we saw when Brexit first came out, because obviously markets were pricing in that actually the UK would completely crash out from Europe. But more recently, we've been expecting a deal to get done. So if that were to occur, that would be certainly something. And then obviously on the other side of the seas, it's the expectation for Fed policy moving forward, and then I would say most importantly, US growth, which seems to have picked up recently, can maybe carry the rest of the world if it continues with the help of these tax cuts coming through, which will be another boost to corporate earnings.
Jasper, just on the Fed, would you anticipate going into next year once the new Fed chief is in place, sort of nervousness in the market, or is the market fairly clear that at least on monetary policy there'll be a scant difference between the new Fed chief stance and what it has been under the previous chief as well?
I think there almost seems to be an understanding between the administration and the Fed in this policy pick of Jerome Powell that actually policy is going to pretty much continue as it was. There's no need for emergency stimulus in the US anymore. There is a need to normalize rates, but obviously the administration want that to happen at a pretty slow pace so they can get through their agenda of higher economic growth. So I think Jerome Powell's on side with that. He's generally falls in the middle somewhere. I don't think he wants to disrupt markets, but probably this pace of rate hikes is going to continue into next year, not so much because of the overheating of the economy or because of runaway inflation, but just because financial conditions are so easy and really it's just time to normalize rates.
So and then, sort of any material change in the direction of the dollar will probably not come from Fed policy, but from elsewhere, perhaps, the Trump administration and the various things that are going on with that administration and its policies.
I would tend to agree with that. Yes, Trump, the administration and the progress on his policy agenda. And then there's also just overseas. And I think probably you'd look squarely at the face of the European Central Bank for that. We're getting a new appointment at head of the Euro group today. That may give us a little bit of an idea who replaces Mario Draghi as head of the ECB. But I think probably whoever does replace him eventually, still we're looking at eventually the ECB has to start playing the same game that the Fed is, and that's reeling back some of this emergency stimulus, because we're already seeing that European growth has been very strong recently, and there's really no need for the kind of stimulus levels that we have at the moment. So we're looking for the ECB to pull back, probably at a quicker pace than the Fed tightens. So that just generally means that actually those two policies are coming closer together rather than diverging, and so that should be good for the euro. Though obviously the euro has already had a very good year, so maybe the pace of gains will be a little bit slower.
Jasper, we began this conversation by talking about the amount of money that's come into the Indian equity markets. November, for instance, has seen about $3 billion of foreign institutional investor money coming in. How would you view emerging markets in India in that context from a foreign portfolio inflow standpoint?
Well, I think when you look at these inflows, probably it's a fairly straightforward move because it's been a bit of a rough year in terms of the outlook on India, and I think people are just looking for a bit of a bounce back. So the extent of that bounce back, I think it probably, opinions vary. But the fact that there's going to be some sort of rebound, I think, makes sense on a number of fronts. And so, for that sake, it's almost one of the kind of few value opportunities, if you like, within emerging markets, which still look to be very strong and obviously outperformed most other markets this year.
One view that we've heard from most foreign investors, Jasper, is valuations. You know, if I can just map the Sensex, benchmark Indian exchange, along with how the MSCI has performed, both MSCI Asia Pacific or the global index, we're far ahead in terms of valuations. How does that sit with your view that there is still value?
Well, I think what's it about 18 forward EPS, I think, on the Sensex is around there. So that's about a basis point above average. So I still think there's room to go, and it's more within a context of just India in the kind of the growth opportunity in the decades to come. I think you want to be positioned for that, and you just want to be in a play. You want to get into it at a point when there's been a slip, and I think that's what we've seen recently. And so it's more of a value in context of a future opportunity versus rather than value versus other parts of EM, which I agree you on a sort of direct metrics basis you would find more there, but just less opportunity going forward. I think that's why they are as they are, the numbers as they are.
Jasper, one last question from me. I know you were sort of joking when you talked about the Bitcoin, and this question is half tongue-in-cheek, but only half so. Are there people out there sitting thinking that we're in the wrong asset class? Crypto assets is the place to be, or have been at least?
It's very hard to tell how further this can go. Obviously, people have been saying it's a bubble since Bitcoin was $1,000 a coin, and now it's obviously hit 12,000. So I heard the Winklevoss twins, some of the first official billionaires, resulting in Bitcoin speculation. I'm sure we'll hear more stories like that. When you do hear stories like that, that obviously encourages people to get into the market who probably haven't researched the full nature of it and don't fully understand the risks involved. And I think it's just natural that as we get more stretched here, I think at the moment we're in a situation where every sell-off almost reinforces the bull market because it gets bought up straight away. But at some point, you're going to have a bit of vacuum, people who aren't really willing to tolerate the kind of volatility we see in crypto, and that's going to encourage further selling and really kind of test the strength of the market. And it will be, I think the ultimate test will be when some of these early investors who are quite concentrated within crypto decide that they've hit the point where they want to cash in. That will be the biggest test.
Jasper, we'll leave it there. Many thanks indeed for joining us. Jasper Lawler joining us from the London Capital Group, talking about Bitcoin, global markets, and what's in store in 2018. Back home, Rahul Gandhi moved a step closer to becoming party president of the Congress party. He filed his nominations for the elections, which is considered a mere formality. The Gandhi family scion has been spearheading the party's campaign in Gujarat, has been busy coordinating with allies, including Hardik Patel. What does this mean for the Congress? Poornima Joshi, political editor, The Hindu Business Line, joins us on the phone line. Poornima, thank you so much indeed for joining us. Yeah, that's exactly it. What does this mean for the Congress? Symbolically, does it mean anything at all? Is this about rejuvenating the party cadre? Because, I mean, this is a given, isn't it?
Well, it is a given in terms of procedure, but I think the most interesting part of Rahul Gandhi taking over in the context of Gujarat elections is to rejuvenate the cadre a little bit. Congress does have 38% of the vote in Gujarat, and this is a very, very critical election because it happens to be the home state of the Prime Minister, and the Congress has not been there for 23 years. So Rahul Gandhi taking over at a time when his party is literally fighting with their backs to the wall. One argument, of course, is the dynasty politics and so on. But the more significant aspect of it is how the leaders that have organically emerged in Gujarat, such as Hardik Patel and to some extent Jignesh Mawani and Alpesh Thakur, who have all been sort of incorporated into the Congress, there has been a Rahul Gandhi stamp behind it. So he may be a product of dynasty, but I think the best part of it is that he will still have to prove himself, and he's trying to do that with trying to reinvigorate his party in a difficult election and so on. So it is of symbolic importance in Gujarat. Political parties do get formed and destroyed during elections. So this is an interesting timing by the Congress leadership. Sorry?
Go ahead.
Yeah. So I'm saying there is one aspect of it is, of course, the criticism about dynasty politics. But if you look at other parties in India, besides the BJP and the CPM, the two cadre-based parties, which have leaders emerging from the bottom, we have the Congress, which is literally like fourth generation Nehru Gandhi party now, and the rest of the regional parties, which are all owned by one family. The more significant part of it, that is one argument about dynasty politics versus democracy. But right now, the more important part is what Rahul Gandhi does next, because Congress's problem is not just Rahul Gandhi. Congress's problem has been a structural decline of the party in the last 2 decades, where they have been reduced to third or fourth position in very critical states like UP, Bihar, Andhra Pradesh now, Tamil Nadu. These are all Maharashtra. These are all critical states which the Congress has been steadily losing. They're losing cadre, they're losing elections. So, and their structure has been literally sort of destroyed. So, Rahul Gandhi, we have to see from Gujarat elections. I mean, it's something that he has been able to at least put up a fight in Gujarat, where the BJP has the best possible organization in the country. They have a very good leadership. The Prime Minister is there literally camping. You have almost the entire Union Cabinet campaigning there last week. So if he's able to get the Congress's vote up, or if he's able to make a dent in Gujarat, then it will re-energize the Congress in the coming elections. And we have another set of critical states: Karnataka, Rajasthan, Madhya Pradesh, Chhattisgarh, where at least in Rajasthan and Chhattisgarh, also to some extent in Karnataka, Congress does stand a good chance. So I think this election the timing is important. And if the Congress does get a boost in Gujarat, it would be attributed to Rahul Gandhi, because so far in the last 23 years, the Congress has not been able to put up any fight against the BJP. They've done, somewhat well in the Lok Sabha elections in 2004 and 2009.
Okay.
But assembly elections, so far the BJP has had an upper hand always.
Yeah. Poornima, if I can just slip in a question. Most opinion polls seem to suggest that the BJP is likely to come back, although on a reduced majority. What number would mean for the Congress would mean, this is Rahul Gandhi's success? And do you anticipate organizational level changes in the Congress party now that he's taking charge, or now he's expected to take charge?
There will be organizational and structural changes once Rahul Gandhi takes over, because this is a generational change in the party. I mean, if you see Gujarat, you haven't seen much of the role being played by people like Ahmed Patel, who have been active there for the longest time. It's a new set of people that Rahul has used there in terms of his social media campaigns, in the context of getting in new leadership into the party, energizing the local leadership, distribution of tickets and so on. So there would be organizational and structural changes initiated by Rahul. He would get his own new people in the party. He's been trying to do that in the Youth Congress and the NSUI, but Congress is an old sort of rambling organization, so he's not been able to make much of a dent structurally. The second thing is that I haven't seen too many opinion polls about Gujarat so far, and I have spent a week there, and what it looks like is that there is there is an anti-incumbency against the local government, not against Mr. Modi per se, because Mr. Modi continues to be very popular and a powerful campaigner in Gujarat. And it's significant that he's spending so much time in Gujarat, which the BJP is not leaving anything to chance, and they've got a good organization. But there is local level anti-incumbency there, and people like Hardik Patel are making some sort of presence felt in particularly in areas like Saurashtra and South Gujarat and Surat, where he's shifted the discourse from quota agitations to now farm prices, the price of groundnuts, the price of castor oil. He's talking about the lack of development in rural areas. So he's getting, I've been to some of his rallies, he's getting a fair bit of response. In Rajkot, he held a huge rally on the day that the Prime Minister was in the area.
Okay, Poornima, we'll have to leave it there. I've completely run out of time. Thank you so much, Indeed, for joining us with those details. That's the political action. Rahul Gandhi is expected to take over the Congress party as the president in a few weeks from now.
All right, that's all the time we have on Power Lunch. We're leaving you with a flattish market with slight gains. Thanks for watching.